Hello there, my name is Conrad Kluge and welcome to the Kluge Wealth Advisory Group Client Monthly video for June 2026 as well as Q2 2026. As I'm sitting here filming today on Tuesday, June 30th, there's a few things we want to go through in this month and quarters video. The first is we want to touch on a simple win and some way to improve after-tax returns in a portfolio. Now this is something we're already doing, but I did want to make sure that we're providing some education around it. The second is I wanted to touch on a number of your frequently asked questions around Bitcoin as well as the future potential path of interest rates, because I know there's been some change in that regard. And secondly, just wanted to make sure that we were providing some perspective on what we're seeing right now in markets as well as with the portfolio. So before we get into the rest of the video, there is two other things that we want to make sure that we bring up here. The first is that summer months are a bit slower, and I recognize there's lots of vacations going around out there. But we are here, we are working, and so if you have questions or if there's planning work you'd like to do on retirement income planning, estate planning, or perhaps education or philanthropy, we're here to help and I'm more than happy to work with you here over the summer months. The second thing I want to bring up here is that we recently did a podcast style discussion with the good folks over at BlackRock to provide us with their views over what are the themes that are going to be driving the investment markets over the next 5 to 10 years. So that was a really interesting discussion, and we'll be sending that out as soon as we have that compliance approved. So without any further ado, let's get right into the meat of the video. In each of these monthly videos, I always like to share one idea that is simple but still powerful in its impact to your bottom line. And the strategy we want to talk about here today is asset location. Now you can have two completely identical portfolios, both in terms of investments, objective, as well as account types, and have two very different after-tax rates of return. Now, we need to take a step back and look at how investment returns are taxed in Canada. We know that interest income is taxed at the highest rate, Canadian source dividends are a little bit better, and that capital gains are the most tax-efficient source of return because only half the gain is taxed. So, this creates a situation where you can have a very easy win for your portfolio from a tax perspective. If you take a look at your portfolio as a single unit at the household level that incorporates corporations, trusts, your personal accounts, RSPs, TFSAs, you can actually locate the assets that are least tax efficient inside of accounts that are tax-free, such as a tax-free savings account or an RRSP. And it allows you to earn returns in the most tax efficient way possible. So this is something we do all the time here at the Kluge Wealth Advisory Group. It's our default setting, really, if you want to put it like that. Now, of course, if you've instructed us not to do it this way for different reasons, we, of course, are not doing it. But it is something that we do just as part and parcel of what we do every single day. Because sometimes, really, it's about working smarter. It's not about working harder. All right, so let's get into a monthly and quarterly recap here for portfolios and markets. Now, one of the things we wanted to add onto this section here is a brief outlook section, because we have and continue to get a lot of questions around the outlook at this point. And so rather than featured as a frequently asked question, we wanted to take a few minutes and talk about that here as part of our recap. Now, if we take a look at markets over the last month, markets were generally flat to slightly down, depending on which major index you want to take a look at. And I wouldn't take anything from that other than it just is a consolidation of the very, very sharp gains that we saw from April and May. If we take a look at interest rates, key U.S. interest rates, which are of course the most important ones in the world, they slightly fell over the course of the month as again commodity and oil prices fell. And if you take a look at commodity prices, they also generally, if you take a look at the Bloomberg Commodity Index, did fall quite sharply over the course of the month, and a lot of that was driven by the fall in the price of crude oil. Driven, of course, by the settlement, the apparent settlement to the Iran conflict. Now, in terms of the portfolio, we did actually manage to have a solid positive month, and that really just comes down to allocations that we had in the industrial stocks, financial stocks, as well as certain pockets of the technology sector that did perform quite well. And so we always want to carry that away as a win, and that does lead to, of course, portfolios having a very, very solid quarter as well. Now, in terms of outlook, there's a few things we want to talk about here, but I think really the most important part of the outlook is just that we do remain positive over the next 6 to 12 months. Very likely will be pockets of volatility just because we have been in a high return, high volatility market now, really since COVID, where it's characterized by 3 to 4 steps forward and 1 to 2 steps back and another 3 steps forward. And we were positive for a couple of reasons. First is that fundamentally speaking, and you can see from the slide we're going to put up here, we know the U.S. economy is on pretty solid footing, and we can see that really starting to come through in earnings estimates. Now, earnings estimates going up is very positive because ultimately stock prices follow earnings, and you can see that earnings have increased sharply here over the course of the last 6 months from the slide. If you look at the bottom of the slide, you can actually get a sense of the magnitude of the, how important that is, because despite the fact that the market has rallied so far this year, it has not actually kept pace with earnings estimates and has actually become cheaper. So again, another piece of fundamental support. Now, I always liked also to take a look at quantitative studies. Now, I like these quantitative studies because they really take the emotion out of things and they do show the general tendencies. And we'll just use this next slide as an example. What this slide shows here is ultimately is that when the S&P 500 has returned more than 19% over a trailing 45-day period, which it achieved recently on June 2nd, that 6-month forward returns were typically around 12%, and 12-month forward returns, which would be returns culminating at the end of May next year, were typically around 20%. So if anything near to those numbers happens, that's a pretty good outlook, and I think we should be very happy with that. Now, if you'd like to get into a little more detail or discuss any of these other things and how that more pertains to your situation, happy to have that conversation. Just pick up the phone, give us a call. We're here to get the job done. Now, getting into your frequently asked questions from the month of June, I think one of the key questions we saw was just around Bitcoin and cryptocurrency in general, in terms of what's going on in that space. Now, we always want to start every discussion around with Bitcoin and cryptocurrency just by saying that, that Bitcoin is a high risk, high return type of asset, and it's extremely volatile. In fact, it's 5 times as volatile as the stock market. So it's something that you always want to bear in mind here. The bottom line is that we did see a very, very powerful rally in Bitcoin into the fall of 2025, and then no follow through, which is very unusual. And, really returns since then have been disappointing. Now, I think the key driver of those disappointing returns, since the fall of 2025 has really been there's a lot of uncertainty. And there's multiple sources for that, but I think one of the key sources is actually the fact that the Clarity Act has not been able to get through both houses of Congress in the US. And that's a key piece of legislation around Bitcoin in particular and cryptocurrency in general that needs to come through in order to help really solidify the asset class's position. Now, underneath the surface here, it doesn't look like Bitcoin or cryptocurrency are being abandoned. In fact, you can see increased signs of institutional adoption in many respects. You're starting to see countries such as the United States look at establishing strategic Bitcoin reserves. You are seeing large banks like JP Morgan and Goldman Sachs adopting blockchain technology, as well as producing products centered on Bitcoin. Asset managers such as Morgan Stanley are now advocating for up to 4% of portfolios to be in Bitcoin. And you're starting to see Bitcoin use cases in the AI economy. So there's a lot of fundamentally good news here. Now, that does not and has not guaranteed any results to date. However, it does argue that for a small allocation of portfolio, that it does make sense to keep some allocation. Now, if we take a look at the way in which we're looking at Bitcoin and cryptocurrency in general here, is that we want to keep in mind a few things. The first is we just want to recognize that it is an asset class. It's an emerging asset class for a portfolio, but it's an asset class nonetheless. We want to recognize that it is a high risk, high potential return asset, and it's not for everybody. We also want to recognize that we want to keep allocations relatively small, between 1% and 2%. Big enough that if it does produce its historical returns, that it will produce a nice tailwind for the portfolio, but small enough that if it were to go to zero tomorrow, it wouldn't destroy what is ultimately a pretty decent year. And so we want to bear those things in mind. And I think it's also important to note that it's important that you understand that we're always looking to understand it. We're always looking at the fundamentals and always making sure that we understand Bitcoin in the context of a portfolio and how it can enhance or detract from the risk reward. So if you have some further questions on this about how that impacts your portfolio or any questions in general, please pick up the phone, email us. We're here to help and happy to give you the answers you need. Well, one of the other questions we saw come up quite frequently over the course of June was around interest rates. Now, I think a lot of these questions were spurred by the fact that we do have a new chair of the Federal Reserve, Kevin Warsh, And there were a lot of news headlines and opinion pieces about the fact that, that it would appear, that the market is now reading Kevin Warsh as somebody that is inclined to raise interest rates versus lower them. Now, I think if we take a step back for a moment, we can see that there are a lot of forces actually working both ways here, right? Obviously, we saw an oil price spike, which is going to have downstream impacts due to the Iran conflict. That is bumping up short-term inflation numbers. However, there are also a lot of factors that are going to help reduce inflation over the long term, right? Demographics being one of them, technology and other factors. So there's a lot of push and pull in terms of inflation. That's generating a lot of uncertainty. And I think compounding this is also the fact is we always have to remember that when central banks raise interest rates, it takes 12 to 18 months for the impact of that rate hike or cut to be felt. So you want to be very careful about reacting if you're a central bank to temporary factors such as an oil price spike, which is now resolving as we're filming this here today on June the 30th. So if we pull back here, and I have to insert my own opinion, I really think that because of the level of uncertainty and because of the delays and the various offsetting factors, is I just don't think we're going to see a lot of movement in either direction, up or down, over the next little while. And that means that really uncertainty is going to persist. And I think that if we also look at this from a Canadian perspective, it's actually slightly even more uncertain because the Bank of Canada also has to consider the impact of rates on our currency, right? If we were cutting rates while the Americans are holding, that's going to have a really negative impact on the loonie. So I think what we have to accept here is that we are in a period where short-term interest rates are going to be uncertain. We have to be looking and doing our research and paying attention to what's going on in the economy. And ultimately, you also have to remember that at the portfolio level, interest rates are not the only driver of returns, right? We have exposure to the economy, we have exposure to new technologies, et cetera, et cetera. And so these are also important things to consider. And this is why a disciplined investing approach makes sense, especially at times like this. So if you have many more questions here on interest rates or things related to it, again, here to help and happy to answer any questions you may have. So in putting it all together here, I think the bottom line is that, as you can see, markets have been strong, but things are not simple. There's a lot of uncertainty out there, and that has naturally led to a certain degree of unsettled feelings. And I think that's really where it's important to recognize this is where discipline comes into play, right? Discipline in terms of portfolio construction, discipline in terms of managing risks, as well as discipline in terms of making sure that we take a look at the long-term view. And that is the view that is the one that's going to drive the ultimate success or failure of your financial plan. So if you have any questions or you'd like to go into further detail or understand how any of these things affect you specifically, we're here to help, happy to have those conversations and give you the answers to your questions. Thank you very much, and we'll look forward to speaking with each and every one of you very soon.